So it's clearly been a challenging week in markets, and there is a lot to unpack, including the reasons for optimism as we head into the remainder of Q4. As I mentioned on Monday, the turbulence that we're seeing shouldn't really phase folks in longer term positions, assuming you are positioned appropriately, but it is something to work around if you are swing trading, particularly with options. The good news is that we closed the week with a green weekly candle on the S&P 500, reclaiming more than half of last week's pullback, and we formed a clean inside bar, which generally signals indecision or consolidation. A pause, not necessarily a breakdown. So in other words, the markets are catching their breath. Seasonally, this kind of choppiness fits in right with what we have been discussing for weeks. October corrections are common, especially in post-election years, which have a positive August, and the third year of bull runs. I still view this as a healthy temporary pullback rather than a trend reversal. If we look at this chart, historically, when Q4 finishes positive, it averages about a 7% gain with a 5% drawdown along the way. Right now, we're down about 3% from the quarter's peak. So we're right in that sweet spot for a normal setup before a year-end rally, and often October lows set the low for the remainder of the year. A good rule of thumb that I like to use is that the sharper the pullback, the longer the time needed for consolidation. And the drop in these equities that we saw today is not too dissimilar from the crypto drop last Friday. Is gold a natural short? I don't know. I think that's a very risky play. It could pull back, 15%, sure. But I would say most likely it consolidates because gold has had to catch up in terms of its monetary value. But I could see this consolidating again and then perhaps pursuing another leg higher.